Good morning. Yesterday, the Indian markets witnessed another very volatile session, though range bound. After opening with a positive gap, the Indian markets suddenly fell into the negative zone, but later recovered in the second half to end the day on a marginal positive note. However, the mid cap and the small cap indices emerged as the major gainers of yesterday's trade, which surged in excess of over 1% each. Metals was the flavor of yesterday. The sectorial metal indices ended the day 3.9% up, with the frontline counters such as SAIL and Hindalco being up by 10.5 and 8.7% respectively. FIs were once again handy in the cash market segment, wherein they pumped around 943 crores in yesterday's trade, with the domestic institutions once again being sellers to a tune of 611 crores yesterday. The volatility index, as measured by India VIX, surged over 16% in yesterday's trade, which suggested that the volatility for the near 30 calendar days has improved a lot. The US markets yesterday ended on a positive note after the new US Fed chief, Janet Yellen, reiterated her stance that the central bank's commitment to the US economy was needed for some more time in order to revive the suffering labor market. Coming to today's session, today is a crucial day for Indian markets. The Reserve Bank of India is coming out with its monetary policy today at 11 a.m., where it will reiterate its stance towards growth or containing inflation. The policy guidelines will be crucial as the inflation as measured by WPI and CPI have surged to their new lows for last month. The question before the RBI will either be to revive growth or contain inflation, which is due for the upcoming months. The Reserve Bank of India has also asked the Indian government to cut down in its holding in PSU banks to avoid corporate governance issues at a time when the PSU's asset quality is deteriorating. On the other side, there is some positive news on the core industries data. The core industries, which account for nearly 38% of the IIP, have grown to a 5-month high of 4.5% in February as compared to 1.6% in January. This was on account of higher electricity, steel, and coal demand. Coming to today's session, the Indian markets are expected to be positive for today's session. The Asian markets were trading in a mixed zone as the HSBC PMI data showed that China's economy fell to a 8-month low of 48 in February. Major resistance and support levels for Sensex comes around the level of 22558 and 22383 levels, while major resistance and support levels for Nifty comes around the level of 6766 and 6707 levels. Thank you very much and happy investing.